in terms of lost economic output could hit as much as 2.5 trillion pesos. That is if the virus is not contained around the world. Now, take note that this is the worst case of a pretty wide range. They estimate that the economy may lose between 276 billion pesos to as much as 2.5 trillion pesos. So depending, of course, on how the situation unfolds, this range is quite huge, especially in the coming months. Now, the best case is if the virus is contained within the second quarter, that's around the world. That means economic losses will now be capped at 276.3 billion pesos. If the virus is contained around the world by the third quarter instead, PIDS estimates losses of around 1.6 trillion pesos. Now, PIDS is saying that the transport, storage, and communication sector will suffer substantial losses as tourism activities grind to a halt, but it will be manufacturing and wholesale and retail trade that will see the biggest amounts of losses. Moving on now to the equity space, you're going to be seeing my Bloomberg terminal here, and it's not a pretty picture. We had been above 5,900 yesterday, and we've more or less erased those losses, trading at 5709.25. That is sliding by close to 4%. We actually hit already more than 4% losses earlier on this morning. Now, this might not come as such a surprise, especially following U.S. markets and how they performed overnight. We did see a flurry of economic releases in the U.S. We'll get into that later on. But just to highlight several things in the U.S., retail sales fell a record 8.7% in the month of March. Factory output dropped by 6.3%. That's the most since 1946. And April is shaping up to be even worse. You've got the New York Fed's manufacturing index shrinking to negative 78.2. That's the fastest pace on record and double the estimate of losses that were estimated by analysts. And you've got even a 30-year history of home builder sentiment suffering the biggest monthly decline in 30 years. Now, even more bleak, you've got new job or unemployment filings for Americans. That was 5.5 million just last week, and that brings a total of 4 weeks of job unemployment filings to 22 million jobless Americans right now. So that wiped out all of the gains that we saw since the last recession. Another thing to note, offshore is oil, which dove to the lowest since 2002. It has actually since recovered. But suffice to say that all of this sentiment offshore has erased what was seemingly a positive, first 3 trading days for this week. We were well into bull market territory. We had rebounded 29%. I'm just going to bring out the year-to-date charts for you guys here so you can see how we had already been on the uptrend. And a lot of analysts had said this was backed by the fiscal stimulus that the government gave out. Recall, there's this now new 51 billion peso package for the MSMEs. You've also got the AP Securities saying that there's a growing sentiment that the virus could be temporary. They had even said yesterday we might be seeing a V-shaped recovery on the back of all of these fiscal and monetary stimulus. And this after IMF had already downgraded the Philippine growth forecast for 2020, but did say that they saw a 7.6% rebound in 2021. Rachel Cruz had said that now investors are still slowly rotating their money around, and that actually had led to this rebound earlier on, and that markets are now focused on laggards and second liners. But as it stands, you can see here that the exodus, at least, or people selling out, is still very, very much alive. And just to highlight the fact that foreigners still do not have a lot of faith in our local markets, foreign fund withdrawals year to date are now at $800 million. And you can see that here. That's the 21st straight day of an exodus that we've seen, at least from yesterday. This is the longest streak we've seen since 2018. So Claire Alviar of PhilStocks is saying that the market with this positive sentiment supposedly could have gone back to 6,000, but also actually warned yesterday that there might be a sell-on rally, especially highlighting the fact that foreigners still don't have the risk on sentiment in terms of our markets. And we're definitely seeing that happening once more again. Very quick peek on how our sectors had performed here. everyone in the red. Properties in particular just being sold off by down by more than 6%. Industrials as well down by 4%. No one really spared here. Financials as well seeing 2% losses. And this despite the fact that we actually had a couple of stocks that I wanted to highlight because they were giving some positive news in terms of how they're pivoting this crisis period into their favor, one of which is Surtec. So this has been in focus, especially because this company had been embroiled in the U.S.-China trade war initially, but then also just manufacturing and supply chain disruptions. Investors very much worried about this. They now seem to be having a second life, and you're going to be seeing that Surtec up by 14.1%, definitely outshining the rest of the bourse that is languishing at the moment, trading at 7 pesos and 83 centavos. Now they have said that they're experiencing a surge in medical chip orders, and their medical chips are being used in several applications that are very crucial right now: ventilators, CT scanners, ultrasounds, thermal scanners, oxygen level monitors. They will be producing 1 million chips per week for these devices, and this is according to their vice chairman, Jorge Aguilar. They are also maintaining an operational work schedule of 24 hours per day, 6 days a week at their Laguna facility. So definitely one of the crucial sectors here that still need to be operational. Another thing, apart from just the medical devices, is the surge in their antenna demand. They're one of the leading antenna chip makers over in the US, because of the fact that there's a lot of work from home policies, and this is boosting data requirements. So again, Surtec just ramping up their medical capacity. Another one that I need to highlight, and I'm very curious to see how this is opening this morning, is IMI. And indeed, as you can see, it is in the green. Now, this stock had been battered. That's like the to put it gently, but right now it's rebounding by 10 and 4/10% to 5 pesos and 30 centavos. This is, of course, an Ayala unit which had to close or shutter down its facilities in China. It was one of the first directly affected by the COVID-19 outbreak, and then it had to partially shut down facilities here in the Philippines and then announce a shutdown in Mexico. They are now ramping up production also of medical equipment, components, and even testing kits. They mentioned, so this segment was only around 1% of their revenues previously, but they said that these sales, at least in China, had helped them recover during the lockdown from Feb to March. So they're actually on track in terms of their sales simply because of this medical equipment pivot, let's say. So IMI's China facility is now back to full operating capacity. They've also been part of a consortium in the UK, at least with the UK government, making test kits and also producing 1,500 ventilators a week. So very interesting pivot here for IMI. They did highlight, however, that the Philippine business in particular, so the local business, could take a revenue hit. Factories have 1,000 people installed instead of the usual 6,000 people because of the lockdown measures. Now, I just have to highlight, and I'll show you guys the performance of the stock. But this, is extending gains that we've seen 4 straight days in the green already after having surged by 4 and 4/10% already yesterday. So we'll be checking back in on markets later on. Checking in on headlines, we're watching this Thursday. The country's balance of payments position swung to an $839 million surplus in February. So this comes as the import demand slowed due to uncertainties caused by the COVID-19 pandemic. The over $800 million February surplus takes off from a $1.3 billion deficit in January and is bigger than the $467 million surplus a year ago. Now, the BSP explains the surplus in February BOP inflows is arising from the government's foreign currency deposits with the Bangko Sentral. These inflows, however, were offset by the government's payments servicing foreign currency debt obligations during the month. Economists attributed the surplus to lower imports, a stronger peso, and firm dollar reserve levels. Now, meanwhile, the BOP position in the first 2 months of the year swung to a deficit of $516 million. That is a reversal from the $3.17 billion surplus seen in the same period of last year. And maybe it was inevitable, but the BIR finally extending the deadline for income tax filing. That's now until May 30. That's another 2 week of extension for taxpayers. This, of course, tracks the similar 2 week extension of the extended community quarantine until the end of May. Now, recall that the deadline was already extended to May 15 before the ECQ was even extended. The BIR said it will move the deadline again if the ECQ is once again extended, such that taxpayers will have 30 days to settle taxes after the lifting of the quarantine. The central bank is looking to take its cue from various multilateral lenders before signaling a deeper cut to its benchmark rates as a means to shield the economy from the impact of the COVID-19 pandemic. Now, BSP Governor Ben Diokno had earlier mentioned a possible reduction to the key interest rate and even bank reserves to boost the liquidity, but all of that needs proper timing, according to him. Now, Ben Diokno says that the BSP is still crunching the numbers at the moment and looking at how the economy is performing with assumptions of multilaterals in hand. You can see on our screens here the IMF, the World Bank, and the ADB recently made drastic downgrades to the country's economic outlook amid this global pandemic. But as caution, the BSP says it is ready to cut rates below 3% during this, quote, once-in-a-lifetime crisis. Now, recall that the central bank's latest move was a 50 bips cut last March, bringing the key policy rate to 3.25%. So these are interesting times for companies, to say the least, and everyone has had to adjust to the new normal. Now, here to give us a feeler of how the work from home model is working for one of our largest BPO operators, Thomson Reuters, we have with us Tess Veloso. She is the lead for global strategy and relationship management. Hi, Tess, and I hope you're hearing us very well. Now, can you give us just a very quick briefer on the status of Thomson Reuters right now here in the Philippines? At least how many employees are now working from home? What technologies are you using? How exactly are you doing your meetings right now?
So good morning. The Thomson Reuters is at 100% work from home, with the exception of our journalists, of course, who are out and gathering the news and reporting to the world. We are working. We've been working from home since March 16. So very soon after the quarantine was declared by the president, the team was able to deploy everybody working from home, and with all the machines that they needed.
So 100% workforce working
100%.
from home.
Yep.
Was this something that your culture had to begin with? Were people already encouraged to start working from home? Did you have investments in this to prepare you for certain times? I mean, that's very preemptive.
Yeah. Well, we're a very large millennial workforce, and everybody wants to be able to do a lot of different things on top of the work they do. So we had been actively exploring work from home as early as when the telecommunications law was passed, but had not gotten to the point of deploying it. So that when the COVID-19 situation started escalating, this gave us a very, very good opportunity to test it. We had tools. So as early as 2019, whether COVID-19 was happening or not, we were deploying tools like OneDrive in May, MS Teams for our online conversations, collaboration, and virtual meetings were taking place there. And then by the end of December, every single employee at Thomson Reuters was given a new laptop.
Okay, so this is something that you mentioned has already been in the culture since a couple of years already. How do we compare? I mean, Thomson Reuters is a huge global firm.
Yes.
Is this something that is being deployed globally? And what is the infrastructure here in the Philippines enough, or at par with other countries for us to be able to maintain this sort of lifestyle?
So there's two things about that. The first one is the corporate infrastructure, which, like Thomson Reuters has done, has invested quite a lot of time, money, and effort in making sure that we have the right tools and systems in place. Now, the other part of it is the infrastructure in the homes of our employees. And what I can say is in Metro Manila, it's pretty good because our employees have the ability to access multiple ISP providers and have the ability to use things like dongles or broadband. I think outside Metro Manila, it still needs a little bit more of development. We have employees who have been able to access internet, but of course, there are times where the internet is moving faster or slower, which means that they end up having to work either earlier or later when the internet speed is much better for them.
Okay, but is this sort of apart from the technology? What about the upskilling? Did you have training courses for people to understand how to work from home? I mean, do people just did they just immediately adapt to this new normal?
So work from home is something that everybody's aspired to. We did not prepare for this in terms of training, but what we're doing right now is we're providing everybody with tools to help them do their work better. So first of all is we have learning opportunities in what we call Thomson Reuters University that gives people micro-learning on resiliency, working from home. We give people work from home tips and tricks on how they can do this. We're also helping our people managers because prior to this, working with your teams was very physical and very interpersonal. Right now, because we're all working remotely, it's going to be impossible to do that. So our managers are very creative in finding ways of engaging with their teams so that they keep connected despite the fact that we are not physically together.
Just on that topic, because it's been a debate, right?
Right.
With even just online learning in universities, for example, is that a good replacement enough? Do you feel that you're losing something and this is just a temporary, a good situation in times like these when there's a crisis to be able to have an option to work from home, but still the physical contact, the meetings with people
Yeah.
physically will never be replaced? Or do you feel that this is really the future of work?
So long before COVID-19 started, we had already been moving to a more virtual and electronic way of work learning. We moved away from what's called instructor-led training to online learning, self-directed learning, micro-learning, because we know that our employees have very little time. So life is so harried and that you don't have 2 hours to sit in a classroom to learn something. So we've been able to create micro learning opportunities for employees, and this is what prepared us very well for this scenario. That being said, though, you can't take away the personal interaction. So there will always be things that will be best when you have personal interaction, but our teams are actively looking for ways to engage people remotely so that even if you don't see each other, you're still connected.
What will happen after the lockdown, Tess? Are you going to continue with this, scenario? Will people be encouraged to still work from home, or is it going to be just back to normal, back to physical offices?
I don't think it's ever going to be back to normal with COVID-19 happening and, talk about the second wave of this and all of that. The scenario I see for the future is it's going to be a mix. We will have to become constantly flexible, looking for other opportunities where we can work and develop and deliver to our business, despite the fact that we are not physically in the office. We will need support, of course. The government's guidance and our company guidance will help us chart the right path for the Manila office.
Finally, just before I let you go, I just wanted to ask one thing. How much should companies spend on this model? I mean, you're a BPO firm, so there's a lot of technology that's involved anyway. But for normal companies, I mean, should they be shelling out a lot of technology? Are there really companies that can completely work remotely and simply some sectors that are just not fit for this type of work?
Of course, with BPO companies, my personal opinion is you can find a way to work remotely. There are contracts, of course, that you have to consider what your customers and your stakeholders allow. But in terms of investment, I think it is important for us to invest in the right technology and the right, which means both software and hardware, and making sure that our employees have it in the right scale. You can't just give it to the top 10% of your staff. You have to be able to give it to as many people as you can, because that is what's going to sustain you in situations like this.
Okay, so it has to be equalizing. And finally, Ms. Tess, you have relief efforts as well. So part of
Yes.
the private sector that's pitching in. Tell us about that. those.
Yes. So one of the things we know, of course, is the best thing we can do at a time like this is to stay home. And it's staying home and staying safe, which is the best help that we can do. But that doesn't prevent our staff from wanting to be able to help. So we kicked off a fundraising drive called Mass Production for Mass Testing. And this is raising funds to help the National Institutes of Health develop test kits, which we will be donating to DOH accredited hospitals so that we can accelerate mass testing for the Philippines.
Okay, so good luck with that, and thank you for your efforts, especially in pitching in. Thank you so much. That was Tess Veloso, lead for Global Vendor Strategy and Relationship Management at Thomson Reuters, giving us a flavor of how it's possible to have 100% work from home scenario. Thank you, Ms. Tess.
Thank you.
Okay, quick check on how our markets are doing. The good news is we are keeping our heads above 5,700, as you can see on my screens here. The bad news is that we are still down close to 4%. Very quick picture will show you how there's only one stock in the green right now, and that is Security Bank, which is up by 2.3%. Everyone else languishing in the red, in particular the property sector, as I had mentioned earlier on today. The entire sector losing more than 6%. Robinson's Land losing more than that, down 7.1%. Ayala Land as well. Mega World and SM Prime just pulling the rest of the bourse down. And as I mentioned, this follows a difficult day that we saw in Wall Street, and you're going to be seeing those losses here, but not just Wall Street, Asia Pacific as well, just languishing, albeit I've got to say definitely not as bad as what our PComp or PSEI is seeing. The Topix down by 1% rather, and the Nikkei down by 1.2%. But still, you've got, the markets in China, for instance, in the green, at least as of 10 minutes ago, together with other markets like the Kosdaq in South Korea. So it's not necessarily everyone in the red right now, but nevertheless, this coming from the fact that the S&P 500 in the US retreating from a 1-month high, and you've also got new reports coming out. The IMF, for instance, even pushing forward how it sees the Asia Pacific region growth in 2020 to be at a standstill. Zero growth would be the first time in about 60 years, and even worse than we've seen in the previous crisis. They had already mentioned that it would be worse than the Great Depression, if you recall what we said yesterday. And you've also got Bloomberg Economics now saying that the fallout in Asia Pacific in the second quarter will be even worse than the first quarter. So not a pretty picture. And I just wanted to close very quickly on Cebu Land Masters, which did report some earnings here, and just to add some positivity to the mix, especially for the property players. And seeing that stock is actually 2.3% up compared to the rest of the property players. They had just reported a net income growth. Again, this is for 2019 of 21%. That's driven by higher reservation sales and the expansion of their leasing and hotel portfolio. So that's around a little over 2 billion pesos in net income for 2019. That's a record year for this property company on the back of revenues up by 26% to 8.5 billion pesos. They also have 28 projects in the pipeline worth 30 billion pesos. They're saying that despite these difficult times, they will be pushing on with that program. So yesterday, shares had already jumped by more than 4%, extending those gains by 2.2%. So again, another bright spot, despite the fact that the rest of the bourse is not necessarily doing very well, paring back the gains that we saw earlier on this week. That's a first look into the business day this Thursday. Today is April 16, 2020. Thank you so much for watching. Catch us again tomorrow, 10:30 a.m. I'm Danny Laurel, and we are One News.